This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming out of a weekend. It's a Monday morning, start of a new week. We are coming to you live, as always, from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning. Good morning. The weekend went by pretty fast. I mean, it was like I was sitting with you guys on Editors Roundtable, 1 hour ago.
And you told us you didn't want to see us, right? So we stayed away.
You made yourselves invisible over the weekend. But how was the weekend, guys?
A great weekend. I mean, I had a good time, spent a lot of time with my family. And
Arsenal's had a big win as well.
Arsenal had a big win last night. It was a hard-fought win. You know, the scoreline at the end of it was 2-0. But it was a hard-fought win. And good to see Arsenal still with a chance, putting the pressure
closer
on
to
Man
the
City.
Title, right? Closer to the title.
But guys, we have a full 5-day week.
Which one is not used to, but I think we'll have to, right?
Yeah.
I mean, there's no option.
But I think the Bulls are going to like that because there is a little bit of ammunition to take the markets ahead, right?
It looks like it, and like Arsenal, will the markets have a hard-fought victory? I think that's the point to see. You know, the point is that it's almost like 1 week, 2 weeks, the market does well. Then there is a bit of a pause. I mean, the last week was that pause with the Friday correction that we saw. Will this week be the week where the market maybe is able to sort of put on some wings? Now, the reason I'm saying that is because Friday, suddenly things turned. And the reason they turned is because you had global equities which rebounded in a very spectacular fashion. So you got the NASDAQ, you got the S&P, you got the Dow, the Russell 2000, the troubled regional banks, all of them flew. The changes are up on your screen. And this is quite something, isn't it? Now, the reason is very simple. The reason is data was strong. Just last week, we had, of course, the Fed decision. There was a hike. And many were saying, well, you know, they're going to be on a pause, extended pause, etc. What do we get on Friday? We got a super strong, unquestionably strong U.S. jobs data, jobs report, right? The labor market, which is the number one priority, which the Fed wants to cool down, came in. And this was the strongest April in some time. And the market responded the way they did. So in a way, what the reaction on Friday from the market tells you is that the market has kind of moved on from, trying to price in what higher rates will do, but they are looking at the damage to the economy. And as long as the economy seems to be in decent shape, the markets are in decent shape as well. Now, U.S. yields were higher, not by much. I mean, the 10-year was up for about 5 basis points. Market pricing of Fed rate cuts pulled back. So before the jobs data, the market was pricing rate cuts of 100 basis points through 2023. After the data, that pricing came down to 75 basis points. Oil prices also rebounded. They've been sinking. They're up about 4% on a Friday. Now, this is, of course, the global setup, and this kind of is an improvement after a lot of pessimism around growth, recession, etc., etc. The U.S. economy, according to this data point, is still in a pretty fine fettle, pretty fine form. Where does that leave us here in India? The Nifty on Friday cracked. I mean, it fell about 1%. The Bank Nifty fell even more, 2.25% or so. Supports, I want to start with supports once again. The SGX is indicating a slightly higher start. We'll come to that in just a bit. Supports for the Nifty come in at 18,042 and 18,000. These are the two supports that you need to kind of keep in mind as you go into today's session. The resistance for the market comes in at 18,267. These are very near-term levels, 18,267, 18,300. Those are pockets into which the market will find resistance. It'll have to fight through these levels to kind of eye the new highs, etc. So this is the setup on the Nifty. The Bank Nifty has supports at the 20-day moving average, which comes in at 42,320. And then the resistance for the Bank Nifty comes in at 43,740 as well. So for the Nifty and the Bank Nifty, if you do get a bit of a sort of up and up move, there are resistance pockets which the market, both the indices, will run into. But the thing is, after Friday's almost a waterfall kind of a decline that we saw, you have a bit of data out of the US, you have a bit of global price action which perhaps stems that fall a little bit and provides hope that maybe, just maybe, over the next week, 2 weeks or so, the market at least sort of, runs up a little bit, touches that all-time high. It's closer for the Bank Nifty as compared to the Nifty, and then we'll see where the market wants to go from there. Sonia.
Absolutely. I think things are stacked in favor of the bulls, right, this week. At least that seems to be the moot point. So can the bulls make a comeback? There's definitely a lot of ammunition. The Nifty, remember, is facing a bit of resistance at that 18,200 mark. So the important question is whether there is enough in the queues to take the Nifty above that level. There are strong global cues. FIs have made a big comeback, 7 straight days of buying from FIs. In fact, FIs bought about 770 crores on Friday. There's large selling from DIs, so let's not forget that. But put together, in May so far, in the first week, there's over 5,500 crores of buying from FIs. So definitely there is, ammunition over there. Strong global markets, as we've been telling you. The SGX Nifty is also indicating a 30-point bump up. The Asian markets are looking pretty good. Very good, US jobs data. And not just that, the unemployment level in the US has dropped quite a bit. This is the lowest unemployment that the US has seen since way back in 1969, coming in at just about 3.4%. So that's something that the street is going to take with both hands. But back home, a couple of cues that I'm tracking, mixed, result reactions today. You've had good numbers from Paytm, so that's one of these platform companies that would be in the news today. Good revenue growth, the EBITDA before the ESOP cost has been solid as well. And for the full year, the contribution profit that we track closely, that has improved about 50%. So that's something to watch out for. On Coal India, it was a weak operational performance. There were higher wage provisions, so that's something that the street may not like. But there are a lot of results to watch out for this week, largely from the pharmaceutical as well as the auto space. So we begin with Lupin, Lupin, Dr. Reddy's through the course of the next couple of days. There's Cipla at the end of the week. In the auto space, there's Apollo Tyres, Bosch, Escorts, Eicher Motors. So it's an action-packed week in terms of earnings as well. But that's the big question, right? I mean, the SGX Nifty today is indicating the start will be in the green, but that 18,200 mark has been a bit of a congestion zone for the market. Important to see if that gets taken out.
Well, that's right. It was a weak close actually on Friday, both for the Nifty as well as the Nifty Bank. So we start off in the green, but that congestion zone, 18,250, 18,300, as we've seen last week, that continues to hold out. The Nifty Bank, that's going to be the swing factor. Remember, it had a very weak close. Yes, HDFC Bank was tracking in Friday's trading session. The problem was suddenly Federal Bank came out with a set of numbers, didn't look too good. And that's why you had the Nifty Bank that ended virtually at the low point of the day. Now, holding on to this 42,500, 42,600, that's a very, very important range. Because on the way up, that was a bit of a resistance. If that level can be held up, well, the bulls will feel they're still in with a chance. The institutional flows, that needs to be tracked very, very importantly. And I say that because the net institutional numbers, they were positive. That's putting the FI and the DI numbers together. But in Friday's trading session, well, it was a negative 1,400 crores odd because of the DI selling that was reported. Now, that's important because the FIs, yes, they continue to buy, but the buy number, net buy number was down to close to around $100 million odd. We were getting used to that $350 million odd. So the FI buying slowed down a little bit and the DI selling picked up. So we'll keep an eye out on the institutional numbers. The FIs, what do they do in the FNO market? Well, they added close to around 10,000 short contracts and now they're back to being short on the index. So close to around 55% of their positioning is on the short side. Not a bad thing. In fact, I would like this number to go up a little bit because in case the flows don't support, then the shorts in the system will support the bulls. On the option side, they bought more calls than puts. But the important point to note is the way they're writing calls as well. Close to 3.5 calls were written for every one put. So at higher levels, you're likely to see a firm resistance out there. And that's the way the PCR as well. Now, the PCR went dancing away to around 1.35, which is the upper end of the range. Now that's cooled down to around 0.85. No, it can go lower. Yes, it can go to around 0.65, 0.7 odd, where we normally see it pace out. So just keep an eye out on that mark. But what were they writing on the call side? 18,200 call, 18,100 call. And, just plugging in those numbers, you're getting the resistance zone. Because 18,100 call, the premium was around 150 rupees, 140 rupees. So, that's giving you the resistance zone on the upside. But risk reward could favor. If you want to buy, you should be looking to buy closer to around that 18,020, 18,050. That's what the options data suggests. And that's what's, been profitable as well. On the Nifty Bank, very, very important that it holds on to those lows that I just mentioned, or that support zone. While on the upside, last week's high, well, that'll be a bit of a resistance zone. My take is today is that don't rush into buy at the start because we're going to get 30, 40 point higher. Maybe if you want to get in closer to around the support zone. That's 18,020, 18,050. Otherwise, we're back to that range. So let's see how this one goes.
All right, Nigel, thanks for that. Well, before we go any further, let's quickly tell you what's lined up here in the first 30 minutes of trade today. We get you updates from markets across the globe. Ed Yardini of Yardini Research will join in to discuss the global trade setup. Our research team brings you CNBC-TV18's list of top 10 stocks of the day. At 8:30, we have our market expert, Prakash Devan, joining in with a take on stocks he likes and results he likes and dislikes.
All right, let's kickstart the show. On the equities front, we have two views coming in this morning, so let's get both of them out. Lawrence Belanco of CLSA says the Nifty continues to work its way higher following the breakout from the short-term downtrend. He says the next event is a test of a major overhead resistance at 18,363 area. He adds, looking at the MSCI India Dollar ETF, we have a short-term base in place with the recent break above $40.3. He says the Nifty Bank Index has been a key driver for the Nifty's recovery rally of March lows and flags that State Bank of India is a good buy candidate.
Okay, Gautam Dugar of Motilal Oswal says that fourth quarter FY23 corporate earnings so far have been in line but lopsided with performance of heavyweights such as Reliance, Axis Bank, ICICI Bank, HDFC Bank and TCS driving the aggregate. He says spread of earnings has been decent with 77% of their coverage universe either meeting or exceeding profit expectations. However, he adds growth has been led only by BFSI, auto and tech. A bit of a repeat of the third quarter. He says after a flat F523, Nifty now trades near 18 times 1 year forward PE, which is a decent drop from the level of 21 times seen at the beginning of F523. He maintains their overweight stance on financials, capex, autos and consumption. Goes on to say they're neutral on IT, healthcare, while they have an underweight stance on metals, energy and utilities in their model portfolio.
Okay, let's also get you some views on how the money markets could shape up today. B. Prasanna of ICICI Bank says the end of the rate hiking cycle indicated by a dovish Fed hike and regional banks crisis kept the dollar under pressure. He says the dollar traded near a yearly low but found some support by stronger than expected jobs data at the end of the week. He says the rupee traded in a narrow range with an appreciation bias, with the RBI recouping dollars against inflows. He says FPI inflows and a weak dollar are helping domestic currency in the near term, and he expects the rupee to trade in a range of 81.40 to 82.10 this week.
On the bonds, B. Prasanna says global yields soften as FOMC shifted to a data-dependent approach. He adds, though economic trends remain robust, risk of contagion from banking crisis and an eventual sharp economic slowdown kept expectations for faster rate cuts alive. He says local yields drifted lower as well on the back of strong investor demand and expectations of peaking out of the global rate hike cycle. He expects markets to consolidate at current levels with a 10-year benchmark range bound between 6.9 to 7.1%.
All right, we have plenty of news flow that came in on the weekend, and we'll get to all that stock-specific action in just a bit. In our special Top 10 segment, we're looking at Britannia, Marico, Paytm, IndusInd Bank, their stocks on the back of positive news flow. While on the flip side, you have Coal India, Aditya Birla Fashion, TCNS, Sun Pharma, Adani Gas, as well as Adani Transmission, their stocks that could be reacting to negative news flow.